Welcome back, focused learners, to This Explainer. Today, we're pulling back the curtain on literally one of the most ruthless, highly competitive industries on Earth, professional prop firm trading. We're going to analyze a really unique roundtable discussion featuring a group of the world's absolute best prop firm traders, and we're going to uncover how they actually extract money from the markets week after week. If you want to know what truly separates the seasoned professionals from the amateurs, you are definitely in the right place. All right, let's jump right in. $17 million. That's the combined, verified prop firm payouts of the elite trader roundtable we're analyzing today. We're talking about a group that includes the guy who pulled the first seven-figure payout in the entire industry, plus the current world record holder. But here's the really shocking juxtaposition for you. Despite having incredible access to education and technology today, 95% of retail prop traders fail. They completely blow their accounts. So what exactly is the $17 million secret that the 95% are missing?
To answer that, here's our roadmap for today. We're going to cover the secret strategy myth, relying on historical data, reading the market internals, looking behind the candle, and finally, building a consistent edge.
Okay, Section 1. The secret strategy myth. The illusion of the 95%.
There is just a massive stark contrast in focus between the everyday masses and the actual elite. Retail traders, man, they will literally waste 5 to 10 years just chasing new concepts. They bounce from indicator to indicator, hoping the next YouTube video is going to hand them this holy grail that somehow magically prevents losing trades. But when our elite roundtable was asked to pinpoint the source of their success, absolutely no one mentioned a specific secret trading concept. Instead, their focus is entirely on personal development, refining a single edge, and relying heavily on data. They treat trading as this rigorous exercise in self-mastery, not some scavenger hunt for a magic setup.
And honestly, this is perfectly encapsulated by a quote from one of the roundtable's top earners. He says, "I don't change my model even if I take 50 losses in a row." I mean, let that sink in for a second. A retail trader takes, 3 losses, and they completely abandon their strategy. But an elite trader, they survive a massive drawdown with unwavering trust in their edge. Because to them, a loss is simply a pullback on the way to new highs. Their model doesn't change, their execution just remains flawless.
Moving right along, Section 2. Relying on historical data. We're talking cold, hard math here.
Now, I know data sounds like a boring spreadsheet to some, but for these guys, it's the ultimate psychological anchor. It's literally a lifeline. When an elite trader hits a slump, they don't panic. They look back at their historical data and realize, hey, I've survived this exact scenario before. Data identifies repeating mistakes. It tells them exactly when their confidence metrics are low, so they can systematically size down their positions. The crucial takeaway here is that tracking your data keeps you humble, and it's what prevents those emotional account blowups during unpredictable black swan events.
Let's look at how this data actually sets realistic goals in practice. $416. Story time. After losing $1.7 million in a previous business venture, one of these traders sat on a curb in Shanghai and calculated his exact path to $1 million in futures prop trading. He wasn't looking for massive erratic home runs. He looked at the pure math. Earning just $416 a day, spread across 20 copy-traded accounts, equals over $8,000 a day. He put that right into a spreadsheet, mapped out a 120-day goal to hit $1 million, and because he stuck relentlessly to that daily mathematical target, he actually hit $1 million in just 82 days.
Let's move to Section 3, reading the market internals. This is all about tactical preparation.
Listen, elite traders absolutely do not just stare at a blank chart and guess. They have a rock-solid daily workflow. Step 1, they check macro indicators, things like the dollar index and the VIX, just to gauge overall market fear and momentum. Step 2, they look at market internals like the tick, the advanced decline line, and trend queue. If those internals tip in their favor, boom, they have their bias for the day. And then step 3, they draw highly objective horizontal support and resistance lines based on those internals and the previous day's value. Notice they completely avoid those subjective diagonal trend lines that end up trapping so many retail traders.
All right, Section 4, looking behind the candle, confirming the trade.
So this brings us to order flow. And for you focused learners out there, this is absolutely where the magic happens. Order flow is the tracking of real-time executed transactions. See, while a retail trader is just staring at a solid red or green candlestick, an elite trader using order flow can essentially see right inside that candle. They can see if a massive 1,000 lot transaction is secretly hiding at a very specific price level. It reveals the true intent of the larger institutional market participants.
To pull this off, they rely on a few specific tools. things like bookmap, delta profiles, footprint charts, and big trade indicators. When the price finally reaches their pre-drawn horizontal support line, they don't just blindly buy and hope for the best. They look at bookmap to see the real liquidity building. They ask themselves, are buyers getting aggressive here, or is a massive institutional seller just absorbing all that liquidity? Order flow confirms the trade, which allows them to risk very little for a potentially massive upside.
Finally, Section 5, building a consistent edge. Let's talk about execution rules.
This is where we sharply contrast the disciplined rules of our $17 million roundtable against the 95% of traders who just don't make it. Look at scaling. Elite traders pyramid into their winners. They add size as the trade proves them right, all while moving their stop loss up to protect the downside. Retail traders, they mistakenly dollar cost average into their losers, which is literally the #1 way accounts blow up. Look at drawdowns. Elites use a strict 30% max giveback rule. So if they hit a peak daily profit, they stop trading the very second they give back 30% of it. And as for trade limits, an elite trader hard stops after 2 net losses for the day. Meanwhile, retail traders will sit there and revenge trade 40 times in a single session.
You know, despite having access to the most complex order flow tools and data models on the planet, their ultimate execution is surprisingly minimalist. One of the roundtable traders summarized it perfectly. He said, I think 1 to 2 quality setups a day is more than enough. They heavily favor high-probability base hits over these erratic, wild home runs. They just patiently wait for the market to come to their exact horizontal lines, they confirm it with their order flow data, they execute, and then they just walk away.
So that brings us to the ultimate question for you to take away from this explainer. Knowing what you know now about how the elite 5% actually operate, what is your next move? Are you going to keep endlessly strategy hopping, just hoping to find a magic indicator that frankly doesn't exist? Or are you going to put in the personal development work, start rigorously tracking your historical data, and leverage tools like order flow to build a real consistent edge? The roadmap is right here in front of you. Thanks so much for joining me for this explainer, and remember, keep focused on the data.